Hi everyone, this video will share with you more about hospital plans. So if you need to stay in the hospital for more than 6 hours, or if you're hospitalized and warded overnight, you can claim. So first of all, to understand more about integrated shield plan, there are two main parts. First of all, the additional private insurance coverage that you can get from an insurer. And the other one is the mandatory MediShield Life mandated by the government. So to understand the differences, MediShield Life is enough probably to cover your large hospital bills in Class B2 or C wards in public hospitals, and CPF is the one that manages it. However, for private insurance coverage, it is probably more towards Class B1 or A wards in public hospitals, as well as in private hospitals. And you would have to get from a private insurer. So some questions to ask yourself, whether you want a private hospital stay or a public hospital stay. First of all, is that would you wish to stay in private wards? And why would you want to choose your own doctor? So generally for doctors, in Singapore, we are fortunate enough to have quite a high standard of healthcare. Most of the time, doctors shouldn't make too much of a difference, although there are some people who would wish to have the top surgeons operate on them, and that is up to your own wishes. And of course, in terms of private versus public hospital amenities and infrastructure, private tends to be a little bit better, right? And you can even curate your own menu, maybe even lobster porridge, right? But for those who are not so picky on where they are staying, generally public hospitals tend to be a little bit, I guess, price sensitive, right? Price better in price. Yeah. So the second point that we're talking about would be, can you afford your integrated shield plan premiums over the long run? So private insurance tend to be pretty expensive and it scales pretty quickly, all right? And maybe around 70 years old, we are looking at a total of $8,000 per year. Whereas for public hospitals, it's about $3,000 in total a year. So on one hand, we have to make sure that our MediSave have enough money, and in terms of cash, we are able to afford. So for those who wish to, enjoy private hospital care, make sure that, you have lifetime income generated for you, such that you can pay off the hospital plan premiums. And so to share a little bit more about the healthcare insurance here in Singapore, MediShield Life, everyone have it. Integrated Shield Plan, it's the base plan that you get from private insurer. And co-pay deductibles rider is an add-on to reduce your fees even more, maybe reduce the bills in the end even more. So for MediShield Life, it's usually enough if you were to go for Class B2 or C wards in public hospitals, even more so if you're from the medical generation. And for integrated shield plans, at least if you're going for Class B2 or, for Class B1 or Class A, it is at least important to get this base plan to reduce the cost. And if you want to go for private hospitals, the rider is probably a must. Otherwise, it will be a super huge cost for anyone. So for MediShield Life, similar to the base plan of integrated shield, deductibles will be $3,000 of the first $3,000 of the medical bill. And ultimately, this can also be claimed from MediSave if you were to stay after a certain number of days. And of course, the co-pay and deductibles rider, you can reduce the deductible by either 50% or 100%. And this affects the price of your premiums that you have to pay. Now, MediShield Life, there'll be a co-payment of 50% upon the final accessible bill, whereas for the integrated shield plan, there's only a co-payment of 10%, meaning you have to pay yourself 10% of the final accessible bill. Whereas with the rider, you have to pay only a maximum of 5%, or in fact, capped at $3,000 out of pocket if you were to go to a panel hospital. And lastly, MediShield Life can be paid by MediSave. the base plan can be paid by Medisave as well until it reaches the additional withdrawal limit. Most of the time, private hospital plans, they exceed the limit once you're past 30 years old. For public hospitals, usually only after you are 60 years old. Whereas for riders, there is no choice but to pay by cash. And that's why we have to make sure that the cash flows for yourself are planned well so that you can afford for these riders. And in MediShield Life, it's important to note, yes, it might cost you hefty bills if you do not have private insurance. Whereas for the integrated shield plans, the bills are not so high, but you still have to pay 10%, remember? And for the riders, it is really to ensure that you have the small or capped bills. So just to do simple math here, what are deductibles and co-payment? In a case where you have a $100,000 bill in a private hospital, for example, in this case, the first case, where $100,000, we will first remove $3,500 in deductibles, and eventually getting an accessible bill of $96,500, then you have to pay 50% on your own, in which then we have to pay a total of $51,7500. However, for the base plan that we have, our co-payment is instead 10%. So what we need to then pay would be $3,500 plus $9,650. Then by paying $13,150. Whatever they are seeing here, $86,850. This is paid by the private insurer. And so the rider here, very simple, we'll remove the deductibles entirely, and then adding the 5% here, we actually get $95,000 being paid by the private insurer, and you yourself only need to pay $5,000. Or if you are going for a panel hospital, then it is $3,000. Now, what do we look out for in a shield plan? All right, and the first thing is that we look at coverage. So first of all, coverage amount, how much in total you are provided for in a year. So there are some that ranges from 1 million onwards to 2 million, even 2.5, the highest so far. And coverage amounts is important, all right, but usually most shield plans out there on the whole tend to be enough unless it's a super complicated surgery and there are many things to add in later on. But otherwise, all insurers out there, the coverage amount shouldn't be a main issue. Of course, there are some companies out there that provides refreshable limits, meaning that if you need the hospital twice for 2 different issues, you get to cover twice the amount. And the second point that we need to take note here would be the scope of coverage to see if there are any limits upon the plan that you have. So for example, there are some plans out there that actually mention that, okay, what coverage, maybe $800 a month, or like dialysis not more than $2,500 a month, things like that. There are many limits to certain items, so do take note of that. The best would of course be as charged, so you don't need to worry about how high the bill will be. And next of all would be the pre and post hospitalization and surgery. So of course, the longer the better, and I'll explain more on this in a visual later on. And lastly, for the coverage portion, the scope. So whether or not they cover overseas treatments, that will be pretty important, especially if you have a proration, then overseas costs will be very high. So of course, we'll look at the price, how affordable. First thing, look at the premium. Can you really afford it? Can your Medisave support it as well? And the co-payment and terms and conditions within the accessible bill later on. So for riders, all right, it will be 5% for non-panel or $3,000 cap if it's for panel or restructured hospitals. And this is how we then calculate the amount to pay when we do need the hospital. So administration-wise, claim speed, of course, the faster the better. usually about 14 days to 30 days. And of course, depending on the doctor's memo. There are some companies out there that takes a little bit longer, but generally it shouldn't be too much of a problem as long as you can get back the amount that you have spent. Liquidity wise, it might only come in more important when you took a loan to pay for the hospital bills. And of course, right now, most insurers have an automated letter of guarantee, which will then be e-filed to the insurer from the hospital, and then your bills can be claimed. So the idea of pre and post hospitalization might be new to some, or the definition is not really understood by many. So for example, on a certain day, you require surgery and you are hospitalized. And before that, before all this, right, you might need to visit a specialist, you might have all the scans, the diagnostics, the medication, everything, right? For example, if it's 180 days pre-hospitalization, anything that you have done 180 days before can be claimed under the hospitalization plan. And for post, all right, there is maybe, let's say, for example, 365 days. You can claim all your inpatient care, medication, whatever therapy, radiotherapy, chemotherapy, any sort of it, rehab and follow-ups, even a second surgery, you can also claim. However, after the post-hospitalization period, you are on your own. And how then do we protect ourselves against huge bills? We will need life insurance, in which we will look at the next video. So the benefits of having a private hospital stay, all right, because premiums are really quite hefty, a lot more than private, a lot more than public. But why then do we still choose to stay in private hospitals? So first of all, slightly better amenities and higher level of comfort. The service there is probably top notch, unlike a public hospital where the staff to the patient ratio it's a little bit lower. And of course, they have a faster operating schedule. You can actually probably get an operation in 2 days, as opposed to a public hospital, maybe 1 to 2 months, sometimes even longer. And usually, private hospital plans, they have longer pre and post hospitalization coverage, in which it can be pretty important to cover, let's say, cases such as leukemia, where you need long-term medication and therapy. So in the case of emergencies and somehow you have no choice but you're sent to a private hospital, you cannot also switch hospitals in the case of emergency, then in which you might have to pay a much higher price for the treatments that you have in a private hospital. And of course, the last thing, make sure that you have enough in MediSave. And of course, MediSave is used only for hospital plans or disability income. So as long as you have enough, generally you have nothing else to spend MediSave on, you can then spend on private hospital insurance. So just to also share about claims-based pricing, it is a new concept that was introduced not too long ago, maybe around 2017. So the idea here is that the more you claim, the higher your premiums will go. But of course, starting out at a standard price, you will have a much lower amount to pay, right? Perpetual discounts all the way until you claim. So how does this work? You will start off at standard level, usually with 20% discount on the premium. And for example, in this year, right, I start to claim and my premiums start to increase to level 1. However, if the next year in 2023, I do not claim, then my premiums will decrease back to standard level. So as long as you do not keep claiming, you do not misuse or abuse this hospital plan, then you do not need to worry about the premiums. However, in the case that if you really, really do need to claim, you probably wouldn't mind to pay the extra premiums anyway. So another thing here will be pre-existing conditions, and it's also applicable to life insurance. So, people with certain health issues prior, they might be given 3 main options. One of which will be loading, which is more expensive premiums, usually for the less serious cases. things like having a cyst or something like that. But of course, exclusion here also it means that it does not cover related illnesses. So if it's a case of a pretty serious cyst or certain syndromes, then yes, you are not allowed to cover that particular part or anything related to that. And of course, the last thing, if you are non-insurable, then of course you cannot buy the policy. For example, diabetes or cancer.